Recording. All right, what's good, you guys? It's Bakari So Real back again with a So Real trading video. Shout out to you guys if you are subscribers, and even if you're watching one of my videos for the first time, shout out to you. Make sure you like, comment, subscribe because this is day 49 or day 50. Let me see. You guys see in the title, but I'm making this right now. Day 49. Today is day 49, man. It's Monday, July 6th. And hope you guys had an incredible weekend. We got USA playing, getting ready to play Belgium in the background, as you see on my TV. Uh, Super excited for that game. But right now, we're going to get straight to it, man. We're talking about trading gold. And gold is at trading at the price of $4,165 right now as we speak. Let me refresh this just to make sure that this is live. So that way you guys see that it's live. Yep, it says 4,165. And we had a good week last week, man. We had a good week last week. What a few placing a few buy signals with gold bouncing from support zones around 4,000 and around the 3,900 range. And this bounce right here, this change of structure, this reversal right here, definitely encouraged a lot of buyers to get back into the field. A lot of volume, a lot of momentum on the bullish side is helping push the price up for gold. A lot of things is going on with war and stuff right now still, which is helping bring volume into the price of gold as well. But excuse me, but nothing really goes in a straight line. So there still will be some type of turbulence on the way there. There will still be some up and downs on the way there. Um, and that's why we got to stay sharp. We got to stay sharp when it comes to placing our trades. When it comes to risk management, we got to stay sharp when it comes to knowing our exit strategies, knowing our entry points. We got to stay sharp, right? Got to stay sharp. So this is the daily time frame, and as you see, so last week there was 3 days in a row where we were green, but the week ended red. Actually, no, this is the first day of the week with candlestick ending red. The daily candlestick for Tuesday just opened up, so we're technically on Tuesday. It's not Tuesday here in America, but it's gonna be Tuesday, I think, in Australia or something like that. It's gonna be Tuesday pretty soon. So this is the daily candlestick for Tuesday that just started. So that means the week started bearish for Sunday and Monday. The week started bearish. Um, there are some points that I want to like. This point that I want to talk about is this yellow line that goes all the way across. This yellow horizontal line. This line is at the price of 4,282. This was once our invalidation line, meaning if we were to cross below this, we knew that we was going to be bearish, and that's what happened. We had daily candlestick closing below this, and we continue to come down. Now we want to know if this is going to be our entry line, like our bullish line, because we want to know if we're going to get a body candlestick close above this, a body candlestick close above 4,289. If we get a body candlestick close above this, that could be a strong thing. If we start seeing wicks around here, right around 4,280 or 4,300, that can be a sign of uh, decline. That could be a sign of correction. That could be a sign of sellers getting back into the game, um, and with price dropping. We do have this white entry line coming across, showing like how if it was a bit to be a bullish trend to continue, this bullish trend will have to get back above our trend line over here, our horizontal, our trend line that's going diagonal right here. We'll have to get back above this, right? Or else if it rejects, it would just be continuing the downtrend. Um, and so that's what we'll see what happens. If we continue to drop, if we drop from here and continue to go down lower, we can break this support zone. And if we do break the support zone with a close below 3,900, we can see gold continue back down to 3,400, 3,500, right? For those of you who are watching my video for the first time, um, I'm just gonna let you guys know that these three lines right here are examples of times uh, that gold could have bottomed out and created a better bottom structure. Gold could have, corrected and created a better support zone. But these are three times that gold did not choose to create a better support zone, causing gold to go up in a straight line and basically turn into like a bubble. And what happens with a bubble? It pops, it reverses, and it pops back down to create a better structure, to create a better support. So we are looking for that. Nothing I say is guaranteed. It's not financial advice for educational purposes only. But based off our market analysis, we know that sooner or later gold should be coming back down to reset, right? It's already starting to make its way. It's already starting to reverse. But it's still a lot of time for gold to go up and do a double top. And that's why we continue to monitor that on a daily basis, all leading all the way up to today, which is day 49. We are on a 450-day plan. So we're about 401 days away from like completing our plan. So we still have a lot of time to go, right? But with it being day 49, we still have time to go up and create a new all-time high, right? We still have time to go up to create a new all-time high. And so that's why we're still keeping that in consideration, even though we see gold has been dropping below our entry level from the first long positions that we were expecting. Gold has been dropping from those from that first first long position that we were expecting. Gold's been dropping from it. So but I always say the longer that we take to go up, the less likely we'll reach all-time highs. So if we continue to take longer, if we continue to play around this price, around the low 4,000s, high 3,000s, we continue to play around this price and we take a long time to get to if we're not above $5,000 by August, if we're not above $5,000 by August, then it's less likely we'll see $6,000. You know, it's less likely we'll see $6,000 if we're not above $5,000 by August. Um, Definitely by September 1st. If we're not above $5,000 by September 1st, we would kind of be able to know like, okay, this must be the top. This must be the top pretty soon. Obviously, it's running out of gas. Obviously, buyers aren't bringing in enough volume, enough momentum. And so obviously the correction should be on its way, right? And that's what we're waiting on, right? This 400-day plan will have us leading all the way out to past July, a little bit past July of next year. So with these two lines, the blue line and the red line, this shows that if we were to continue dropping right now, continue the downtrend for gold, we should be bottoming out. We should be reaching 2,500. We should be reaching 2,500 by January. By January, February of next year, we should be reaching 2,500. So that's within 6 to 7 months. So within 6 to 7 months, we should be reaching 2,500. That's 6 to 7 months of trading gold, volatility, buying signals, sell signals, catching 40 pips, 50 pips, things like that, 100 pips, just, and then as we get lower, then you can start dollar cost averaging. So if we go up and create an all-time high, if we go up and create an all-time high, reaching $6,000 or more, we can see the red line and we can see us hitting 2,500 by April next year. So that will go from us bottoming out within 6 to 7 months, and then changing that to us bottoming out within like nine to 10 months, within nine months, so it's just being patient. But the good thing about gold is that gold is very volatile, so there are pips that we can catch during the day. There are daily trades that we can catch. So that's the good thing about trading gold is that we will have fun with this. We will still make some money, even with these with the fact that we got to correct and come back down. You know, it's not going to be easy. Day trading gold in these situations are not going to be easy. But once we get to a real turning point, there's two turning points. There's two turning points that we're waiting for gold to reveal. Gold is either going to give us the turning point of hitting an all-time high one more time or a double top one more time. So if when we get to around 53, or let's say not even 53, when we get to around 51, and then what is this? It's tricky. Okay, let's say when we get to around, let's say this red line right here. When we get to around 40, 55, when we get to around 55, that's going to be a good sign for a turning point for us to prepare for the turning point. And that's when things are going to get easier once we hop on that turning point. Or once we get down here to 25, that's going to be a good situation for a turning point as well. So keep that in mind. Lastly, is just again this yellow line. We can make a lower high, so just keep in mind for lower highs. We got to keep in mind for lower highs as we continue to go up. In the market, So that's pretty much it for gold for right now. I'm going to be dropping a crypto video on XRP. So stay tuned for that for day 49 for XRP. But yeah, man, thank you guys for watching this video. Shout out to you guys. Appreciate you guys for whoever watched this all the way to the end. And see you guys on day 50. Let's stay consistent. Let's stay sharp. And hope you guys have a good one.